SGU. This is Star Group.
Look at our logo. So I just reported the bug. It's a Starbucks logo. That's not the real logo. So that's been, Tim told me today there's been a lot of logo problems. I love the fact that it's just logo problems now. For the most part, this is great.
Star Group is out of Stamford, Connecticut. Their subsidiaries are Petroleum Heat and Power and Meenan Oil Company. There's more. I don't know much about this. We just got asked to do this stock, so we'll take a look at. Obviously, they're involved in oil.
All right, $422 million market cap, 5 PE, check mark there. Profit margin is low, 6%. That's an X. Big dividend though, 5% dividend that cost them $21 million a year. Look at this, Seth. Return on assets of 9.4% and return on invested capital of 14.4%. Very, very high levels. Yep. This is energy-based, which I tend to avoid because of the fluctuations in energy prices. So all the more reason to look at it over long periods of time, okay?
Pillar number 3 is revenue growth over the past 5 years.
Barely a check. 1.3 to 1.39. Check mark, but barely. And the trend is actually decreasing. Look at that. So it is decreasing trend. Boy, look at these revenues over the last, look at the last 10 years. It's down from the last 10 years. So I want to figure out why is it down over the last 10 years? Is it merely because of natural gas prices and oil prices? I don't know.
If you guys, we rarely ask, but make sure you guys fondle that thumbs up, like you're tickling Paul's little white belly and buttocks. He really enjoys that. You like to be tickled while making love, I assume. Pillar number 4 is profit growth over the past 5 years.
So this is weird. The revenue is down, but the profit is massively up. $31.4 million to $84 million. So it is a check mark there. But shares outstanding, down significantly. 55.9 down to $40 million. That's a check mark there. So far, this is why energy is confusing for me. Massive fluctuations in revenue and profit. It's just...
Okay, current assets over current liabilities.
307 million versus 366. That's an X, kids. That's an X on the cash on hand versus liabilities.
X.
Here's the free cash flow, guys. This is weird. Negative 20 million to 115 million. Check mark there. And an average of $78 million a year. 78 times 20 is 1.56 billion.
Market cap is 422 million.
Okay, so, all right, this is interesting. Because here's why it's interesting.
Mm-hmm.
Yep. Seth, can you pull out your calculator for me?
Oh, this is where the show goes south, but okay.
Oh my Lord. There's so much free cash flow in this business. So here's what I'm looking at, Sethi. I'm looking at the previous 5 years and the 5 years before then. And the 5 years before then were even bigger free cash flow numbers. Man, this is weird. That's 400, 500, 530. Oh man. So their free cash flow is declining over a 10-year period in terms of the 5-year. This is interesting. So guys, this thing is selling for 6 times free cash flow right now.
This one's got you stumped, huh?
Yeah, and here's why. Let's pull up our sheet. You're going to pay $450 billion for the company.
I love this sheet.
And by the way, this is going to be even better every year. Every year it's going to be, let's call it, it's going to start at 78. And I mean, if this happened, look at your return. Oh, sorry. 0.078. I mean, it's a 32% return a year if you can sell the company for 15 times free cash flow in year 7. So from the number standpoint, it shows this is a screaming deal. And we're going to do, when we have the stock analyzer tool, it'll basically do this, but it'll also factor in shares outstanding. That's the important part of everything, is showing if shares are going up or down, because that's the secret killer that people don't realize. The more shares issued, the more you're sharing your profit with, the less shares issued, and the more shares bought back, you'll be doing better. So if they just keep their shares the same, and they generate this kind of cash flow, you're going to get a 32% return on their money, assuming you sell for 15 times free cash flow in year. Let's look at free cash flow multiple. Let's say the multiple goes down to 7. You're still going to make, if they only sell for 7 times free cash flow in year whatever, you're still going to make a ton of money. You are still going to make a ton of money. You're still going to make 23% return on your money. So I guess my comment is, if you believe that their free cash flow is going to stay the same and get better by 5% a year, even if it gets, let's do it this way. I'm basically making a free cash flow multiple growth of free cash flow. Ready? Look at free cash flow. Make it 0% growth. you're still getting 19% return on your money. Let's say they lose 5% a year. You're still making 14.8% of your money. So guys, I'm sitting there assuming their free cash flow decreases by 5% a year, and they're only going to sell for 7 times free cash flow in the future. You can still make 14.8% of your money. I mean, what's the reason we don't like this?
You tell
Energy?
us, baby.
I mean, it's just energy. That's the thing I just don't like about it. Energy fluctuates so much. But again, I'm making pretty reasonable assumptions here. I mean, you have to go do, of course, everything's about doing more research. But I'm looking at this saying, assuming 5% decline in free cash flow, and you only sell for 7 times free cash flow in the future, you're still going to make 14.8% return on your money per year buying today and waiting 7 years.
Caesar, if you're still on, he queued up the donation today to see this stock. Let us know how you came across this, where you learned about it, what you love about it. Maybe we're missing something. Mo's your name, right? Are they trading this SGU? Are they trading this? What's going on over there? Let me look at this. I don't like where this is headed. It's headed down.
I actually kind of do.
Oh, go on.
So
Sorry.
the reason is I'm looking at the stochastic down here. You see how the red line and the yellow line are starting to converge?
Okay.
That means that this red line is going to soon be heading towards the sweet spot, and the yellow line is going to trail and follow. So to me, I say this is going to be a resistance point at $11 and, I don't know, 35 cents. But if we can get green engulfing candlesticks moving up and then get some true volume and push through that, you might be able to do something with this. But it all comes down to this. You can't get into it now. You're going to be way too early if you try to jump in because you're not in the sweet spot yet. But keep a watch if you want to. Keep a watch on that stochastic for it to roll up. But again, I don't know what. Everything that we're picking today has very low volume. It's hard resistance point. So again, this is another one where.
Hey Mo, do you have a hard resistance point?
Yeah, Paul, we talked about that 5% dividend for this company too.
So here's the deal though. You can't factor that into a discounted cash flow analysis when you're looking at their company cash flow, because remember, dividend comes out of your free cash flow. So if you add the dividend into it also as a return, you're double dipping on the free cash flow, because you take the free cash flow to pay the dividend out. So if you take the free cash flow, don't subtract the dividend, and then add a dividend in as extra cash flow, you're double counting.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.